Hello guys, this is Max here from Daily Market Movements and welcome to another video. In fact, this is the very first video that I've posted in over a month, and you may be thinking, Max, have you ended your YouTube channel here over at Daily Market Movements? Well, the answer is no. I've been posting daily videos for the past, 4.5, 5 years, and I just felt like I needed a break for a few weeks, and those few weeks actually ended up turning into being pretty much the whole month of August, where I traveled around Europe with my partner, and I think I had a well-deserved break. But I'm back, ready to crush the markets now, from now up until end of year and beyond, of course. But things are going to be changing a little bit going forward, team. The way that I do my videos, before I used to post several separate videos. So, for example, I'd post one video where I'd focus solely on the S&P 500, then I'd post another that was solely focused on crude oil. Now I'm just going to do one big video, and if you go on the loading bar at the bottom of this video, you will see that there's different sections where I fragmented this video, and you can see which asset I cover during each particular time, if that makes sense. So yeah, that's going to be the structure of the videos moving forward. And am I going to be posting videos daily? I'm going to try my best to, but when there's times or periods of zero volatility, let's say, for example, during the months of August and September, where there's not as much liquidity being traded in the markets, I may convert to maybe one video every other day, depending on how much the markets have moved. But I'm back. Videos will be posted daily going forward until there is not that much volatility, as I just mentioned. But yeah, thank you for your patience, and let's get started with the S&P 500. Now, the S&P 500, of course, we have witnessed a pretty big drawdown. This kind of took place towards the end of July, beginning of August, where we saw a correction in the market of approximately 10%. So we've had this summer correction of 10%, and it was needed. We just gone up and up and up pretty much since October 2023. Now, if I just show you this Elliott wave theory, we had the 1, 2, 3, 4, 5 count, and the big question is, was this the ABC correction, or could it look something like this? And this is what I'm kind of worrying about with the markets, and how I think that at this moment in time, I still don't believe that we are out of the woods. We failed to break above the previous all-time high that we set back on the 16th of July, which is all the way up at around 5,665. And with that being the case, that means that this B could still be valid. And if we were to see a ABC correction here, and the C leg perhaps being somewhere down here, down maybe near 5,000, maybe even lower, because obviously we would have to break below the low that we formed back on August 5th, which is at around 5,095. This could potentially break us below the 200-day EMA, which would be very bearish for US equity prices. And I'm going to try and do a video later on this week with regards to the yield curve. We've seen a spread between the 10 and the 2-year now uninvert, and that typically is followed by a recession. At this moment in time, it does still look like the soft landing is intact, but the inverted yield curve, or the uninverted yield curve, has always been a very successful indication that a recession is due. Not always right away, but eventually, let's say 12 months down the line. So that's definitely something that we need to keep our eyes on going forward, like the labour market report that we got last Friday, which of course caused some of the weakness that we saw late on Friday, where the markets sold off quite heavy. Then moving over to the Nasdaq 100, very similar to the S&P 500. I've done some wave count here, but the big question was this the ABC correction, and are we in the start of process? Are we in the start of the process of forming the next Elliott wave move higher, or was it the case that was in fact the A leg, the B leg was the highs that we formed just a week ago, or just over a week ago, and could we see further downside? That's the risk here for the markets. And I think to kind of evaluate this, we need to look at some of the biggest stocks in these indexes, such as Nvidia, for example. Obviously, it's been a bloodbath the past couple of days in Nvidia since they reported earnings, where the stock's fallen now 22%. But as you can see from this wedge pattern, we could potentially be finding a bottom within the coming days ahead. And in terms of a percentage perspective, a move low of approximately 5% finds us some major support here. So are we looking at evidence to see whether we can find support at the bottom of this wedge pattern, which might support the fact that maybe the prior pattern that I had was the ABC correction, and we're just in the early innings of forming this next 5-wave move higher, which would be very encouraging for the markets. Also, I think one market that you really want to keep an eye on is the dollar. For dollar, of course, lots of weakness recently. We've broken out of this pattern. So here's some more Elliott wave theory for you. And it looks to me that we could potentially go all the way down to 97 in the coming days and weeks ahead. Here is the 10-year. The 10-year, of course, looks quite bearish as well in this ABC correctional pattern. I do believe that we can go sub 3.5% in the coming days and weeks ahead. And another market that will support US equity prices going higher when it falls lower is, of course, crude oil. Crude oil now trading at lows last seen back in December 2023. So we've wiped out a whole year worth of gains here for crude oil. This is quite encouraging, and it's in my own humble opinion that we could potentially see a move all the way down to $44 a barrel, which may raise the eyebrows of many watching today's video. But how I've calculated that is just the width of this length of this wedge, copied and pasted it. And here we have the breakout price pretty much of around this area here. And that takes us down towards around that $44, $45 a barrel price range. And of course, if we were to break towards the upside, it works both ways. We would have potentially seen a move up towards $111 a barrel. So this kind of makes sense that if a recession was to occur, let's say if the labor market did start to weaken rather quickly, then we could easily see crude oil trading at $44 a barrel within the next 6 to 12 months, depending on whether that recession was to occur or not. So, it's kind of worrying, but at the same time, it's kind of bullish for the stock market at present because we're not seeing that deterioration in the labor market. So this, of course, will aid equity prices going higher. And then, guys, I just wanted to quickly touch on Bitcoin. Bitcoin obviously rallies typically when we have a risk-on market, and we haven't really seen that recently. In fact, Bitcoin has come under pressure since its swing highs all the way back in March. We've seen the cryptocurrency fall around 25%. So I think a good sign that we are about to enter into a soft landing, and we could see the potential for the stock market to rally into year-end would be whether Bitcoin could potentially pair some of its recent losses here and trade back up towards that 70,000 mark. I do like this setup for Bitcoin in the medium to longer term. I think that we can easily achieve 125,000. In fact, I just put out on my X page, stocktrader_Max. And that's my name over on X. So if you haven't done so already, give me a follow. But I think I can let's actually go and find my profile here. I did put a post out kind of explaining about Bitcoin. Here we are. Here are my bull and bear cases. And I have a bearish case at 100K. My neutral is 125, with my bullish being 150,000. So these are my kind of bearish, neutral, and bullish scenarios here for Bitcoin. So I do expect this market to ultimately move high, and that's why I'm really interested right now in buying some of the mining stocks. You have like the likes of CleanSpark and Marathon Digital, for example. But obviously, if you would like to gain access to some of those trades that I currently have open at this moment in time, then make sure you visit the website dailymarketmovements.com, where you can sign up for a very small fee of $29. I, of course, will leave the link in the description of today's YouTube video. But just a nice little short video to kind of get back. This is the format of the videos moving forward. Once again, guys, thank you very much for your patience the last couple of weeks whilst I was just having my break. Hopefully, moving forward, the markets will continue to trade high as they have done over the past 12 months, and you guys will benefit a lot from tuning into my daily videos that I have to post here. But that's going to wrap it up for today's video. Don't forget, guys, if any of you would like to join my trading team and copy some of the trades that I have gearing up for this this potential Bitcoin bull market or this end of the year rally for the US markets, then make sure you do sign up over on my website, dailymarketmovements.com. As I mentioned, the website link is in the description of today's YouTube video. Thank you, guys.